Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Wednesday, March 18th. We are kicking off today's show with some exclusive reporting that Apple is cracking down on vibe coding apps like Replit and Vibecode in its App Store. We're bringing on the reporters behind that story. We're also bringing on the CEO of an AI software company focused on selling to VCs to help us make sense of our story last week that Anthropic is eyeing deals with Blackstone and other private equity firms. Next up, we have the CEO of Gecko Robotics coming on the show to talk about its $71 million deal with the U.S. Navy. And we'll wrap the show with a look at the digital payment space. Our crypto reporter has a story out today about Coinbase's ambition to become the payments layer for AI agents. It's going to be a fun show, so let's get right on into it. Vibe coding apps are having challenges navigating Apple's App Store. That is according to a new exclusive report from The Information this morning. I want to bring on Stephanie Palazzolo, our AI reporter, and Aaron Tilley, our Apple reporter, to share with us what they are hearing. Stephanie and Aaron, welcome to the show. It's great to have you both here.
Thanks.
Okay, Stephanie, what are we hearing about these challenges that vibe coding apps are having with Apple?
So I'm sure that most people by now have heard of this term vibe coding, but just as a reminder, essentially vibe coding is this term that's been used to refer to this new capability where people, whether they're engineers or just non-technical users, can code up apps and games and all sorts of things just by giving instructions in language. So obviously, a bunch of apps have popped up around this idea that are helping everyday people like us, for instance, like code up apps really easily. And so essentially, we've been hearing that some of these, some of the most popular ones of these apps, like Replit and Vibecode on the Apple App Store, have been basically getting their requests to, put through updates shot down by the App Store, unless they make really significant changes to the way that their vibe coding features work. Initially from what we've heard, it seems like the App Store reviewers, almost wanted them to get rid of these vibe coding features entirely. And then over time, it seems like the, changes that they've been asked to do have kind of lessened in severity, although they still are, real changes. And so, for instance, some of these apps are having to change the way that these AI generated apps are previewed in their app, or, changing, for instance, like the types of apps that people are able to create. Like not being able to create iOS native apps for Apple devices, for instance.
So basically, the way I understand this is that some of these apps that have vibe coding features in them, whether or not they're in the app or on their platform at all, basically Apple is making it harder for them to roll out their software updates in some cases, and that's posing a bit of a threat right now to those apps' growth on the platform.
Yes, yeah, that is fair. And again, this is specifically for apps that have, a mobile app in the App Store. So Replit, for instance, it has both like a website, but it also has this mobile app. There are some vibe coding apps out there that, like Cursor, for instance, that doesn't yet have a mobile app in the App Store.
Got it. So, Aaron, what do we know about why Apple is doing this?
Excuse me. So in Apple is very clear, when they get kind of queries about what they're doing around particular apps in the App Store, that they're not targeting any specific company or category. So they said we are not targeting vibe code apps. They want to be very clear. This is a part of a existing guideline they have in the App Store related to features that can change change the fundamental functions of an app post review. So that's what these vibe coding features might introduce. You can sort of change parts of an app after the review process. So excuse me. So I think that's fundamentally their position. They don't want sort of features or capabilities that can sort of mess with their control over apps in the App Store.
But Stephanie, on a bit of a higher level here, I mean, I want to understand why you think Apple might be putting up these challenges. I mean, conceivably, it's because what? These vibe coding developers are making apps that people wouldn't have to put on the App Store. I mean, we've seen Claude Code coming up. People can, I'm thinking about organizing your desktop. It's not a one-to-one comparison. That's the co-work example. But I mean, we see these apps coming up.
Totally. And I think, what Aaron just said is the kind of reasoning that Apple has been giving. However, I think that some of these app developers are pushing back on that reason because they're saying, hey, what if somebody just wants to make a website with Replit, for instance? It's not changing the Replit app at all. It's not changing any other app on the App Store. So I think there's some confusion around like why some of these cases are being counted under this guideline. I think to your question on like why Apple might be doing this, obviously, this is kind of more, our speculation or, thoughts of people that we're talking to, not necessarily, we don't know for sure what's going on inside Apple's mind. But there's a couple of reasons why it might make sense for them to kind of block some of these apps or make it more difficult for them to make updates. Um, One reason is that vibe coding has led to an enormous increase in the number of new apps every day that are being submitted to the App Store. That has obviously made it very difficult for the App Store reviewers to be able to get through such a huge load of new apps that are coming in every day. So putting restrictions on the vibe coding apps might kind of slow down this influx of new apps and make it a little bit more bearable for those people that are reviewing and approving those apps. I think another reason is that vibe coding could theoretically make it easier for people to make apps that are not going on the App Store. So, kind of the example I mentioned earlier with apps like Replit or Vibe Code, you can make these kind of web-based apps, basically websites that are obviously not popping up on the App Store, but people might go to complete different sorts of tasks. And that's not great for Apple because they want apps to be on the App Store because they get to take a nice, 30% cut of any revenue that's generated from those apps, and that's, obviously something that, is very positive for them. And I think maybe just the last reason, again, like, this is kind of more speculation, is that Apple could, not really want capabilities out there that are, sometimes free, that are, competing against capabilities that they offer in their own tools for developers, which is called Xcode. So, just a variety of reasons why this might be happening.
So, Aaron, put this story into context of the other stories that we've heard about Apple cracking down on apps. This is the subject of many different lawsuits. We've seen some of these play out. What do the results of those previous conflicts tell us about how you think this story might play out?
Yeah, I mean, Apple will not stand down, if they feel like there is any sort of threat to their the platform, any sort of potential overtaking of their platform or an app to become more powerful or more kind of important or replacing the App Store as the fundamental sort of funnel for apps on the App Store. They are going to halt it. They will find compromises to let sort of companies continue to exist, but they will always be held back to some degree of what Apple allows in the end. Like you said, there have been many battles over the years, and Apple, will always find some sort of resolution, but it's never to a degree that allows any of these companies to, have their maximum impact.
And Stephanie, last question for you. How much could this restrict the growth of these vibe coding apps? I mean, when I think of apps, I think about what's on my iPhone. When I think about vibe coding developers, I still think of people on their MacBooks. And I know that the MacBook has its own desktop app store, but I think of, desktop software, I guess, and making sort of higher fidelity programs. How much of a setback could this be for Replit's growth, for example?
Yeah, so as you kind of pointed out, uh, a lot of people and developers are accessing vibe coding apps through their computers. So, they're not necessarily coding up apps from their phone, but they're doing it on their laptops because, that kind of allows you to get like much more in the weeds. And so pretty much all of these businesses, have a website that people can access these capabilities through. So it's not like if the App Store doesn't let you put your app on the App Store. It's not like the business is, completely going down. But it still is like a pretty significant source of traffic and revenue for some of these businesses. Like in the case of Replit, which obviously also has like a website that you can download the software from too, in the past couple months since it's been able to make any updates to the App Store, we've seen it drop, several spots on the chart for the top developer tools in the App Store. So, the effect is somewhat limited, but it's still not great, I think, for any sort of app to not be able to reach the users and give them the sort of service that they want.
Right. Well, Stephanie and Aaron, I want to thank you for coming on. That is Stephanie Palazzolo, our AI reporter, and Aaron Tilley, our Apple reporter here at The Information. As venture capital firms plow investment into AI startups, there are also startups trying to sell AI back to those same venture capital firms to help modernize their own operations. Hanover Park is one of those companies. The company helps VCs manage and track their portfolios. It also helps them model out financials. I want to bring on Chris Hladczuk, co-founder and CEO of Hanover Park, to help us share his thoughts on AI and professional services more broadly. Chris, welcome to the show. It's great to have you here.
Let's do this. Excited to be on.
Let's do this. Okay, that was the most energetic someone started the interview. I'm excited for it already.
I'm just getting started, Akash. Let's go.
Okay. Okay, so look, I'm going to get to Hanover Park in a second, but the first topic I want to ask you about is we reported last week that Anthropic is in talks with Blackstone and other private equity firms to help them basically sell AI into their portfolios. And it's kind of a similar parallel in a way to what you do, although I know the functionality of Hanover Park is slightly different. But what did you make of that story? Did that surprise you?
Yeah, I think that we're going to transition from a world of selling tools to outcomes. And I think I've been saying this for a year and a half on podcasts since the dawn of time that B2B SaaS is dead as we know it. A lot of the next great generation of companies will be these AI native services companies that are selling outcomes, not tools. And so every time Anthropic releases a new model, our entire team in the office here in New York City celebrates. This is not one of those things where we see it as competitive. At the end of the day, fund administration, which is what we do, is the ability to generate financial reporting for these investment firms. These investment firms have outsourced this to a third party, and all we're trying to do is build a world that agents checked by well-trained CPAs are executing on that work and not competitive. And so we welcome the improvement on the model front and excited to see where this goes.
Right, but I guess where I'm sort of trying to get at is this strategy of selling to portfolio companies by going through the investors or the owners type of thing. I mean, with your business, is that an approach that you are pursuing too, and saying, "Hey, venture capital firm XYZ, we want to sell this tool to you so that you can sell parts of our suite into portfolio companies." Is that a distribution route?
Yeah, not quite. It's almost like, hey, venture capital fund X, all your data's stale and you have no idea what's going on, but you're making all these investment decisions. Why don't we sell the ability for you to access that data in real time? And so it's really helping the CFOs make better decisions versus selling to the underlying portfolio companies. And so that's why when I'm like Anthropic working with private equity firms to unlock more AI, I was like, great, we can launch an MCP server for people to access the Hanover Park data via Claude. And so a lot of that is, I think, complementary, not competitive.
Right. So, talk to me a little bit then about adoption of AI at these VC firms. They're investing all these dollars into AI startups. How good are they at adopting AI themselves, and do they have the same challenges that we hear enterprises have about change management, having systems already in place that are really hard to switch out of?
I've been telling that it's so funny. I'm talking to GPs all the time at these venture funds, and I'm like, you're investing in this AI future. What you need to have is your stack to be also AI native, because a lot of these firms are still running on tools from 1995, that are checked by an army of fund accountants to deliver financial reporting to limited partners every quarter. And so for us, it's been, hey, you're investing in AI. How can we make your firm AI native? And it's been surprising that up until now, this has not been a focus. But now with AI, context is so important and this data becomes so much more important. So venture funds and private equity funds are saying now is the time by which that change management is worthwhile because of the goldmine of data that's sitting there that they can access. And so I've been pleasantly surprised by how fast adoption's been moving in the past 6 to 12 months and excited to see where it can go.
What's the biggest challenge to adoption right now?
Uh, Migration. That it's actually fun. Migration has become the favorite word in the English language for our team today, where it's like taking the financial data from decades old stale financials and saying, I need to then migrate all of that data to a new system with plenty of the hair and craziness of decisions that were made 20 years ago from a financial perspective. And so taking all that data, cleaning that data, and making sure it's accessible to these AI agents is the key challenge. And so we're really excited about the opportunity with like long horizon and long running agents that other companies like Cursor have thought about for code. We're thinking a lot about that for reasoning over complex financial data.
You guys are using your own models? You're using Anthropic, OpenAI model? Whose models are you using in the background?
Combination of models, right?
Combination.
For certain tasks, we're using Claude. For certain tasks, we're using Gemini, open source as well as GPT.
So what is the biggest issue you have in terms of margins and reaching profitability? Is the company profitable? I mean, how do you think about that?
Yeah, we kind of thought we've been thinking about a lot of like how do we set ourselves up for to building a long horizon durable business? Because at the end of the day, this is a decade long decision when you think about switching your financial infrastructure to a place like Hanover Park, and so that's why we raised the $27 million Series A led by Emergence to really build that future. To say, okay, we're going to be here for a long time. You can trust us to think about this over a decade long time horizon, and so that's kind of part of why we raised the Series A.
Great. Well, Chris, I want to thank you for coming on. That is Chris Hladczuk from Hanover Park here on TITV. Gecko Robotics, a fast-growing robotics unicorn backed by Founders Fund, has signed a contract with a U.S. Navy supplier to bring its wall-climbing robots to the U.S. Navy's ships to help bolster their fleet maintenance operations. I want to bring on Gecko Robotics co-founder and CEO Jake Loosararian to tell us more about the deal. Jake, welcome to the show. It's great to have you back.
Thank you so much. Great to be on.
So last time we had you on, you were telling us all about your wall climbing robots and about the software that goes with it. What exactly are these robots now going to do for the US Navy?
What the robots are going to be doing is going to be surging and supercharging what we're already doing with the Navy, but just at a much larger scale in pursuit of a large goal. And that large goal for the Navy is 80% readiness, the CNO had put out as a really large objective. And you can only do so if you can have superior information and intelligence to be able to understand what's broken, how to fix it, not just immediately when it's in dry docks and being worked on, but into the future. This idea of things don't count unless they're working. This idea that if it's not ready, it doesn't count. This is a core and essential part of Gecko and what we bring to the Navy in terms of technology that no one else in the world has.
And so tactically, these are the robots are gonna like fix things. I mean, like what kind of repairs are they gonna be
Yeah,
doing on these ships?
yeah, that's
I'm
top
not a
secret.
ship. I've
No,
never
no,
done
top
ship
secret.
maintenance.
Can't
So
talk about it. No, just kidding. Well, what we're going to be doing and the things I can talk about are going to be all around the health. So we started this company 13 years ago with this idea and this vision of being able to diagnose the health of the built world. Crazy, big, bold, ambitious vision. We've been doing that for 13 years, building wall climbing robots that can fly and gather information or swim and be submersibles to gather information, whether it's on a sub or before a ship comes into dry dock, to ensure that we've got everything that we need to fix the vessel and get it off and back deploying in a turn conflict around the world. So the information that we're gathering is things like erosion, corrosion, cracking information, gathering information about the health of what's broken, what needs to be fixed, and also creating a digital thread of what goes into and the structures that make up the vessel itself and how those structures are eroding and corroding and failing over time. Our objective is to ensure that we can have a living, breathing idea of the health and performance of the most critical parts of the vessel, whether, again, it's on a surface fleet, an amphib or destroyer, or it's on the sub side. And
right.
we can do that. That intelligence allows for us to be able to modernize, allows us to be able to help the assets last way longer, but most importantly, right now, not be unavailable. And that's the key, especially with conflicts around the world. Your fleet and the army that you go to war with, the Navy you go to war with, that's the only thing that matters right now. Not in 5 years or 10 years, but the technology that we've built is being deployed today and has been deployed for the last couple of years, and now it's being rolled out to a much larger fleet.
Right. How much of your revenue today comes from the public sector versus the private sector?
We have it kind of like varies obviously as it's like taking up larger and larger. One of our fastest growing sectors is the government sector, And so it probably makes up about 20, maybe 25% of the company's revenues. But what you can imagine, you can see is like contracts like this are not easily won, and they show off how robust and how proven and reliable the technology is for the government. They don't adopt, especially in the Navy, things that are promises of things to come into the future. They adopt things that can help them today and are robust and pragmatic. That's the key. And so this technology is a clear indicator that the U.S. Navy wants to be the leader in the world as it relates to this, and they should get
Right.
all the credit in the world for adopting so. But also, this whole idea of things should work and they don't count unless it's ready is this idea that is very, very believed in and adopted and at historic rates in the big energy sectors. I mean, companies
Right.
like ADNOC are leading the way in this. And the vision by Dr. Sultan is one where native on robotics and AI is critical and important for the future. This is the same in the power sector and the mining and manufacturing sectors with our key customers that you'll see. And so this whole idea of what the future looks like, this ability to predict the built world before catastrophic events happen or things fail because they're old. This is a whole new world that we're creating.
Right.
Centralized source.
The public sector is an interesting customer category for us here on the show because we've been studying it more and more, talking to people about it. And the reason I ask what proportion of your total revenue it makes up is because sometimes, these contracts, I mean, they might not be as large as a private sector contract. Again, case dependent, but we've been talking a little bit on the show about the extent to which public sector contracts actually help you then score more lucrative deals in the private sector. Has that been your experience? Are you going to focus more on the public sector for that reason?
We are focusing on the most. So the way we think about the world is if with things go wrong, how consequential are they? Consequential are they? How much value can we help create if we can make sure that a pipeline doesn't explode or a tank doesn't leak oil into rivers, or we can get 2, 3, 4 months faster of turnaround of a critical vessel that's meant to be deterring conflict around the world, out of a maintenance cycle and back in the fight. We prioritize the most important critical pieces of infrastructure, and that allows for us to begin to develop technology that can be used for things like rooftop evaluations to ensure rooftops don't collapse or bridges don't fail and collapse. We have to prioritize the most critical as it relates to highest ROI sorts of physical infrastructure, and then we get more and more powerful with the tech stack and the data stack and the software cantilever, our OS for the built world. That begins to then be benefiting other sectors that it's super consequential when a bridge collapses. But there's just not much money to be spent on that, but the DOT or other sorts of departments, or for a mining sector, if
Right.
if something breaks, it's like maybe that sets you back a couple $100,000 or $1 million, but in the oil and gas, if a refinery shuts down for a day, that's obviously very consequential. So prioritize those and then allow for that technology to be bled into the other sectors. It's not the way I wish it was, but it is the most credible path in terms of creating a business of real impact.
But so, and I guess the question I'm asking is those larger scale private sector contracts that you would seek with a mining company, for example, do they look for public sector work as a qual, as a case study? Is that a box that you need to check in order to be able to land those bigger contracts?
No, it's a good question. No, it just comes down to results. I mean, we've been consistently, it's always like nice to have a headline like this one, but these sectors, like they only look through the lens of how much can you help me today. And also, if you think about like what the world will be in 10 years, how do you help dictate and create a plan for those companies in terms of helping them be ready for the next 5 or 10 years of AI and robotics? That's
So then, let me ask you this: so
primarily.
if it's not the case that they don't look for public sector work as kind of a qualification or kind of a proof point that hey, you've done this in a highly regulated environment, we think you'll be able to do it. I mean, why do you think so many tech companies, and I'm thinking about the big AI companies too, why are they so persistent on getting these public sector government contracts that aren't as lucrative?
I think a lot of it comes down to, in this technology sector, who gets to write the rules, and where are the risks coming from? And you think about like risks to your business. One of the largest risks is policy. I think there's also a lot of lucrative contracts right now that the government is dishing out because there's a very large focus on creating and emerging new primes. Gecko being one of those primes that's emerging right now. And so they need competition, for these gov contracts, and thus they're making it more straightforward than it has been to have acquisition of the technology. But they also these executives, of which we talk to pretty frequently, are very cognizant of the fact that there are rules being written right now. And that's the people that cry the loudest. You should be most skeptical of in terms of just the apocalypse that's coming. There is disruption that's
What do you
happening.
mean by that?
Well, what sells, right? Like what sells is, and when you talk about the end of time, we talk about the apocalypse that's coming. Typically you see most people talking in that kind of way, doing so right before a big fundraise. It's important that you position yourself as an executive as, if you know what the doomsday is going to look like, and you can position yourself as the one to prevent that doomsday, it helps to position you as one of authority. And so, that is just not a position that Gecko's taken. Like, I could be talking about the Terminator robots that are coming, and I'm the one to prevent it all. But that's just not our way. We believe in just delivering impactful and pragmatic results, not creating positions of authority based on fear and fear mongering. There is disruption that's coming, but there's an optimistic future of robots and AI that I believe in, and that Gecko's here to build. And also, as it relates to the policies that are being written, we want to be doing so by getting as much information about the boots on the ground and the reality. Again, a lot of the stuff of like what's coming in the next 5 or 10 years with humanoids, again, be conscious of the fact that uh, folks that lead these companies are very good at raising capital, and they will do so in a way that positions them as an authority figure in these areas. But what you should be interrogating.
Who are you
What are the
talking
results?
about? Who are you talking about, Jake?
I don't
Who
need
are
to
you
get into
talking?
names. You can see like the kind of companies and leaders that take this strategy on. But the key is, and this is the Navy, for example. The Navy is very, they pride themselves on being robust, which means that they do not change the process, procedures, and standard operating procedures lightly. They only do so if it's impactful and pragmatic. Those are the companies that have long-term, like massive value. And this is why Gecko's getting so much attention, is because we're not talking about 5 or 10 years of all the impact. We're talking about today. We've been doing this for the last 4 years, and it's manifested with one of the most respected institutions, the U.S. Navy, into a $71 million contract that dictates what the future looks like in terms of how do you maintain, operate, plan, and get advantage on the intelligence side that no one else has in the world. I mean, this is big stuff, and navies around the world are slow to react to what's going on in the Middle East right now because they don't have this intelligence that we've been giving to the Navy, and that's resulting in these kind of contract sizes. So it's you might get these flash in the pans and these large valuations and dollar amounts being raised, but ultimately it's flash in the pan. Be looking out for those that are clearly delivering real impact today, and doing so with customers that are slow to change. And
Right.
that's these customers that we have: oil and gas, mining, manufacturing, Department of War, like the Navy and Air Force. They don't just buy anything; they buy things that work. Especially this contract represents exactly how impactful a company that builds things that work today can be, and that gives us the right to build the future.
Great. Well, Jake, I want to thank you for coming on. That is Jake Loosararian, the co-founder and CEO of Gecko Robotics, here on TITV. The Information has a new story out today about Coinbase and the ways in which it is trying to become the payments layer for AI agents. I want to bring on Yueqi Yang, our crypto reporter, to share with us what she's learned. Yueqi, welcome back to the show. It's great to have you here.
Hey, Akash.
What is Coinbase doing in service of making AI agents work in the payment sphere?
So Coinbase is an early mover in building up the infrastructure that AI agents will need to use when they eventually make payments. And it is a very comprehensive approach from what I understand. They're building out the payment rails for agents. They're providing wallets and marketplaces for agents where they can discover services that agents can purchase. And all of this funnel to Coinbase efforts to increase the adoption of its blockchain as well as USDC stablecoins, which will help eventually drive revenue to Coinbase.
So help me understand this. How exactly does blockchain fit into the AI agent's story here? I mean, is the idea that when the AI agent transacts, and I'm thinking about the simplest transaction possible, thinking about the DoorDash agent that wants to order the burrito automatically. It doesn't have to consult me. It needs blockchain to do that? Is that the idea?
Yeah, this is the idea that crypto companies are hoping to bet on, which is that as more people use agents to carry out tasks for them, these agents will need to have the ability to spend money, such as purchasing data, purchasing items, in order to carry out their task. And crypto companies are hoping that the preferred method of payment, in this case will be stablecoins. And they have some compelling arguments for that, such as stablecoins are more programmatic and that stablecoins are easy to be integrated with agents, which are already machines. Stablecoins are cheaper than credit cards. But this is something that is still very early stage, and we do also see agents using cards such as the ones by Visa, MasterCard to make for payments. So it's far from certain that agents will end up only using crypto or cards. It might be a mix of both.
Okay. So I see this. I mean, you can choose to work with the traditional financial system like Visa, MasterCard. You can go about facing the same hurdles that the traditional financial system has in terms of maybe slower payments, maybe less customization, or you can go with USDC. It's all software anyway. We can make it work. My question for you now is, where does Cloudflare come into the story? Because this was another character that you focused on in your story.
Yes, Cloudflare is a very important company in this discussion. Cloudflare is an internet infrastructure provider. They powers 20% of the internet, which means they sit in the center of the internet traffic today. And Cloudflare has told us that increasingly they are seeing more of the traffic visiting internet today to be driven by agents rather than just human beings. So Cloudflare last year announced that they're going to launch a stablecoins, which will be used by agents when agents are visiting websites and making purchases. And this is a very coveted partnership right now for crypto company because a lot of them, including Coinbase, want to be the one who's issuing the Cloudflare stablecoin, which will help position them in the center of this agent-driven web traffic.
So basically, Cloudflare has come out and said, hey, we are part of the agent story in the way that we help host a lot of these websites, or maybe, we help support the back end of all these websites. We see the agents coming. They're putting all these requests to us. We're going to help these agents transact by issuing our own stablecoin because we believe that stablecoins will be maybe the right layer. And now there's a race for who's going to get to issue that stablecoin for Cloudflare.
Yes, that's exactly right. And
Okay.
Cloudflare is also supporting not just stablecoin payments for agents, but also other traditional methods as well. They also have partnership with Visa, MasterCard. So stablecoin will be one of the payment methods that they hope to provide to agents in the future when agents make payments.
Right. So, Yueqi, my broader question then is, I mean, what do you think of all this, right? Because, I mean, crypto adoption has been something that we have talked about for years and years, certainly on this show, right? I mean, some people have crypto, a lot of people don't have crypto. Stablecoins have been painted as the future of payments for a long time. They still aren't the dominant way of transacting. I mean, agents is an even smaller bucket of people have transacted with agents. I mean, is this all just, future thinking R&D, or do you see this really being a core part of Coinbase's business?
I think that's a great question. And I think you're right. Stablecoins has been around for a while. There's a lot of interest, especially since last year, after the Genius Act was passed, where people talk about more stablecoins being adopted more widely in the mainstream. In the US, that hasn't happened yet. So I think crypto companies are hoping that in the agent-based economy, they have a second chance to push for stablecoin adoptions. If humans are not ready to use stablecoins for shopping, maybe agents will, and that's the bet they're making. And I will say that we can't entirely dismiss this possibility. I know that agents are still a small part of today's transactions. So everything is very early stage, but it is something that crypto companies are hoping to shape in the future. And then the broader context for Coinbase is also that Coinbase has been trying to become this everything company, which means that they wanted to broaden their services beyond just serving the crypto industry. They recently launched prediction markets, they're getting into stock trading, and all of these efforts is to help them reduce their dependency on the crypto market, which, as you know, fluctuates a lot, and prices can go up and down, volumes can dry up quickly, and agent payment is one aspect of their broader effort to cater to industries outside of the crypto market.
But I was intrigued by this part of the story where you mentioned that Coinbase has actually tried something in the payment sphere before and it hasn't worked out as well.
Yeah, and not just Coinbase either. Like we mentioned, most of the consumers today, everyday consumer in the U.S., are not really spending their money with stable coins at merchants.
So that first attempt from Coinbase was also trying to get people to adopt stablecoins broadly. Or what was it and why didn't it work?
It is still ongoing, and Coinbase has a partnership with Shopify, for example, that enabled merchants on Shopify using Shopify to accept stablecoin payments, and that volume has been small since it launched last year. So we're also tracking these adoptions. We see more real-world adoption of stablecoins outside of the U.S. in countries where people want to have stable currencies or in cross-border settlements. But then within the US, at least, stablecoins are not yet part of our everyday shopping behaviors.
And so last question for you, Yueqi. Coinbase is trying this. Are there now an emerging group of startups as well that are trying to latch on to this trend?
Yes, both big companies and startups are getting into the space. Stripe today also announced that they are launching essentially a competing protocol for payments, which for agents, which will allow agents to make payments on the internet more easily. And Stripe is a very important player to be watching for in this space, given that they're already pretty dominant among merchants, and they work with a lot of AI companies, serving them for their payment function. So Stripe is also pretty well positioned to be tackling this agent.
And they have Bridge as well. I mean, they bought Bridge so they can issue their own stablecoins.
Exactly.
Right. Well, it is another fascinating race to watch. Yueqi, I want to thank you for coming on. That is Yueqi Yang, our crypto reporter here at The Information. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank you all for tuning in. We really do appreciate your viewership. Make sure to subscribe to The Information on YouTube and follow us on X, Instagram, TikTok, and check us out wherever you get your podcasts. I am already excited for our next show tomorrow. Have a great rest of your Wednesday. Bye-bye for now.